Hello, I'm Stella Farrington. I'm Head of Content at Energy Risk, and I'm joined by Paul Cusenza, who is the Chairman and Chief Executive of Nodal Exchange and the clearinghouse Nodal Clearing. Hi, Paul.
Hello, Stella. Wonderful to be here with you today in London.
Yeah, it's great to be able to catch up while you're in London. What are you doing over here?
Yeah, so it's always good to see people in person, right? So I'm really happy to be here with you today. And traders are trading more now from the U.S. into the European markets and from Europe into the U.S. markets. So I'll be able to see a variety of traders and others while I'm here in London on this trip. And it's good to have the face-to-face contact.
Great. Well, let's talk about US power markets.
Yes.
What sort of things are power traders keeping their eye on at the moment? And I'm guessing there's different things in different markets.
Yeah, I mean, it's a fascinating time to be in these markets because more of our energy consumption is switching to electric power from carbon fuels. And we're also seeing an increase in broader demand. So with AI, you're seeing people use a lot more electricity. So data centers are using more electricity. That's increasing demand. You have the crypto environment, and that uses electricity as well. And you just have general, industry sort of growing. So you have electric vehicles and other things. So demand's increasing. Meanwhile, the supply for electricity is changing. We are trying to migrate more to cleaner sources. Coal is declining, for example, significantly in the U.S. over the years here. And as renewables adapt, et cetera, that creates some changes. And then, of course, we're dealing with climate change, right? We see that around the globe. And with the climate change, that creates a lot of volatility. So generally speaking, I think what we're seeing in the markets is an upward trend probably in prices due to the demand. But more significantly is the volatility caused by climate changes in whether power supplies are on or off, or unknown events like geopolitical events that's had a large effect in the last several years. So it's really a fascinating time to be in this industry, but a great time because, again, as I said, in the long term, we're going to consume more and more of our energy with electricity. And so it's a good market to be in power, but the prices are unpredictable. Therefore, it's important to hedge.
Yeah. And I'm guessing somewhere like California, with its very high levels of renewables, has different focuses from ERCOT region, etc. Could you talk a little bit about California prices there? And, is that leading the way? Is that something that other regions need to look at as what might be going to happen there?
Yeah, that's a great question, Stella. I think that it's always important to look at other areas and see what's happening with the power prices. And there are differences in the generation mix in different areas, which can create differences. And of course, weather differences. One fascinating thing I'll mention is that in the month of April 2024, power prices in the Los Angeles area actually went, for the whole LA region, for the month of April, went slightly negative, -8 cents. And that's because there's so much rooftop solar, and that contributes then to the power supply. And when you have a month where the weather is very moderate, like in April, right? It's not hot, it's not cold. So you don't need as much electricity. So enough supply could be provided by these renewable sources. And because there are other incentives for renewable energy, et cetera, that's why prices can actually go negative even, right? But that implication then is still there for other areas. Like, how are we going to deal with if you have like a more solar or some other forms of power, they generate at a certain time. If you don't have the batteries to store and then reuse that electricity later, we don't really have that quite at scale yet, then that means there can be prices that it'll be different over the course of the day. And what are the implications for that for overall electricity, and how does that impact you if you're a generator, say a gas generator, whatever. So
Yeah.
lots of things to think about. And again, that's why, what we offer with the futures contracts is people have the ability to hedge their price risk. And of course, we supply through the clearinghouse to credit risk protection, and there's a liquidity risk protection because you're in a marketplace.
Yeah. So interesting. So negative prices could be something that traders increasingly need to wrap their heads around.
Right. They need to be prepared for that.
Yeah.
And see, that is a situation that could occur. But that said, we're also, as I said at the beginning, we're also seeing increasing demand. So, yes, prices can go that way. They can also go extremely high, right? Where, we had the instance with Storm Uri in Texas, where prices went from typically $20, $25 a megawatt hour up to almost $2,000 a megawatt hour, right? For the whole month of February of when that occurred a few years ago. But you see that also, like even just in the summer, right? We get these days of 100-degree weather day after day, whatever, which is unusual. Well, prices go up, right? So
Yeah.
I think it was just recently, prices in the summer in Texas were like $300 where they're normally $30 or whatever in the summer. So again, that kind of volatility caused by weather conditions is something to be aware of. But yes, we can also have these other unusual cases, which seem, intriguing that we can go negative, but I think there's a greater risk that prices go much higher.
Right. Yeah.
Lower.
Yeah. Okay. So we're talking about the growth in demand, growth in electricity as a whole in the US compared to other energy sources. And also, Nodal is continuing to grow your market share now at 57%. Sorry,
Yes.
57% of open interest in US power futures is now being done through Nodal. What do you attribute that to? How are you attracting this critical mass?
Well, thank you, Sally. We're very proud to be, growing our market share and to be the majority of U.S. power open interest, right? As we started years ago as a startup. And I think, for us, a big factor in that is that we handled the more granular contracts. So we really designed ourselves when we launched back in 2009 to address the granular markets, because it's pricing in the U.S. is very much on a zonal or nodal basis, not just the big hubs. And in order to do that, then we had to be very innovative in how we did risk management. So we did portfolio margining, and we also use expected shortfall because the curves aren't normal, so there's fat tails, so we address that. So we're really good at risk management and handling portfolios. So if you look at, for example, the zonal markets in the U.S., we're over 95% of that market share of the volume, whatever. And with that then come, and the reason we are is because we manage the margining so well on a portfolio basis. We're designed to handle that very well. And that makes us able to be both capital efficient while simultaneously also being very risk protective, because we hold the right amounts of margin in the right places so I can be capital efficient, have less overall margin requirement because I know how much I'm supposed to hold where, but I'm also risk protective in that I don't have breaches. The model works extremely well, which we're very proud of.
Yeah. Okay. Thank you. So let's finish by talking about the environmental market.
Yes.
So Nodal has over 120 different environmental contracts, things like renewable energy credits, California carbon allowances. And what's the Nodal data telling us about market expectations there?
Right. So the environmental markets are fascinating. And one thing that's interesting is we offer more environmental contracts than anybody else in the world. And the reason for that is the programs in the United States are very state-driven as opposed to federally driven. There are some federally driven programs like RINs, et cetera, but most of them are state-driven. And so because of that, then we have to have ones for like, the state of Ohio, like a renewable energy credit, and one for Pennsylvania, et cetera. So that's why you see such breadth. Okay. What's interesting is that those markets have been growing very quickly. Last year, they grew at almost 150%. This year, they're growing at over 50% for us. So the markets are growing quickly. And what's intriguing is that there has been some federal perspectives of, hey, these state programs are getting in the way of our energy needs because they force people to ensure the environmental element. So there's some actions that were taken by the federal government in April, but the states basically, and there was some reaction to that quickly, but then the states quickly said, hey, wait a minute, these are state-driven programs, it's our purview and we're going to continue.
Yeah.
And so they are continuing, right? And just even this week, the California carbon allowances, which is a program that was scheduled to go until 2030, was just extended out to 2045. And when that happened, prices for California carbon allowances went up almost 10% yesterday. So you can see like this confidence in the long-term direction of these state-driven programs. And it's wonderful from my perspective to see that, because I do think we do have climate change. It is here. We should do our part to try and be as clean as possible. I want the U.S. to do its part of it. But of course, I also care about the global element because ultimately it's planet Earth. So hopefully those of us who have the ability, whether it's in Europe or U.S., can also help people in the global South and others build clean energy. Because to me, that's what we ultimately need to do. Because if we don't solve it on a planet basis, then it isn't going to help.
Yeah, yeah. Yeah, so very interesting to hear that scheme being extended out to 45. That's really giving some stability.
2045, right?
Yeah,
Exactly.
yeah,
And then
yeah,
people need that kind of confidence of where things are going directly.
yeah, yeah.
Correct.
Okay, great. Thanks ever so much, Paul, for catching us up on what's going on in the US markets. Always great to see you.
Likewise, Del. Thank you, and wonderful to be here in London because the markets are becoming much more global as well. So it's wonderful to be here with you today. Thank you.
Thank you. And thanks very much for watching. You can read more about Nodal Exchange and why they won Energy Risks Exchange of the Year on energyrisk.com. Thank you.